I made $1,300 today shorting the S&P 500 using supply and demand and auction market theory concepts. And before I get into this breakdown, feel free to check out my description below. I posted a link to my free Discord where I'll be giving out my pre-market levels and analysis for completely free. Go check it out. It's a free community. And let's get right into the trade for today. So ES is gapped down and flipped into a daily downtrend. And because of this, in my pre-market plan, I said I want to be focusing on poor structure to the downside. So my key levels that I was watching for was the 5,450 roll gap, which is right here from this gap left from the rollover, and then the 3,575 settlement close. And those areas tend to act as magnets for price. It doesn't have to work out right away, but they tend to act as magnets and can be used for nice areas of interest to target or speculate that they'll get filled. To show the visual and explain what I was seeing here was yesterday was a double distribution day, but my main watch here was this 30s value area, because where the 30s come from is it's the POC of June's balance. And to show it in a candlestick visual, you can see here this is the balance low, balance high, and 30s is the VPOC of this general June range. And if we look back into market theory, price moves from balance and then becomes imbalance. We create value again, and then to imbalance to balance. So it's a repeated market cycle. And going back to the rules of the 5 auction market theory rules. So we were gapping. Oops, let me go back here. So we closed under these 30s slash balance area. You can look at this as balance. And what I was really seeing was if we can create initiative value under the 30s as we are in an exploration phase. What I mean by this is rule number 3. You can see here once price accepts outside the balance, and we were opening under balance. We even open under this balance and we close under this balance. So once price accepts outside the balance, it is likely to become imbalanced and seek new value, often the POC of older balance areas. So this is a visual what it looks like. And you can see here, we pull up the levels that I was watching for and zoom out. This was the balance area, and the next balance area was not until these 3 5s, 3 7s. So that was going to be my main thesis, and it was going to act as magnets for price, like I said, for on top of the roll gap and the settlement close. And the level that I was watching for to gauge this was this M spike base at the 7.3. So scenario number 2 here, I said if signs of weakness looming under the 7.3s, I want it to be a bear, speculating that the 5.4.50s get tested, which is poor structure. You can see here it has yet to be tested. It's a roll gap. And most of all, I'll take out the settlement close at 3 5s as they have higher probabilities of getting tested. And I want to confirm that with the weak overall market, which I had that confirmation across the board. So to explain the M spike real quick, M spikes are usually the last 30 minutes of the day. And in this case, it was the last 30-minute sell off. And look here, if previous day was a spike on sell off. Today's open is below yesterday's spike low. Could possibly continue in the downward trend. So basically, what you want to monitor is for acceptance or rejection at that level. And that was my level for key level for the day. Those 7-1, 7-3s. You can see here that spike base. Let me pull up the market profile in a separated so it's easier to visualize. So that's the plan, and I'll go over my trades real quick. So I got to my desk a little bit late. So I saw some buying at those 7-3s. You can see clear buying that failed to hold and sustain. And what I was watching here was I can't chase this move down, especially missing out on that 7-3 entry, which I would have gotten in if I was at my desk. And what I said here is I would like to see participants get trapped. And in real time, I saw buying coming in, and I took shorts. Entry at the 7.050s, risking 4 points. Before this, I actually got an entry, but I took it off because I got filled in late and I didn't like my risk. And a good lesson to learn from is we're in control of our positions, and at the end of the day, we're risk managers as traders. So I didn't like what I had entered in, so I simply took it off and then got a better entry. So I got a point better entry off of that, and my stop was high of day. And this is a visual of what the tape looked like at the time. And just to show the profile, you can see we peaked above this M spike base and trap buyers above a high textbook. This DOM visual, you can see that 653 positive delta, 551 positive delta, 713. It was better confluence that 7-3s was at a high of day, and it only adds more fuel to the fire, bro. So you can visualize it on this TOS chart here. So I took it short, like I said, on this retest, stop above high of day, and rest was pretty much history. So the trade actually consolidated for a bit before it worked out, and I was actually spotting some buying at the lows as well. So what I said here was one side has to give. So there was some buying, and there was also some selling at the highs. So whoever gets put underwater will be pressured. And I moved stops to break even once I was up 7 to 10 points. And like I said here again, never hit my break even stop, so I'm still in this. See more buying into the 6-8s, just failing to sustain, but also to the downside as well. There's some selling into those lows, but we weren't getting that continuation I wanted. And you can see here the range is getting tighter and tighter. And in consolidation periods like this, I literally said here, big move is coming off of that. And whoever side fails is going to get put underwater. And I said here, under low of day, pressure on the buyers underwater. Above high of day, pressure on the sellers underwater. And I had a limit at the 5-8 slow of day, but once I saw this strong volume coming in, I actually took it off and said I'm gonna press this into the 5-5 target, which is exactly what happened. So I don't have a visual of this, but I said strong volume coming in, I may press into target, and I got all out of the 5-5s for a nice 30-point winner. And in hindsight, I honestly wish that was my first scale out because market ended up moving lower into the 3-5, like I said in my pre-market plan. But at the end of the day, I followed my plan, and I can't get too upset over missing out another like 20 points. Although it will be something for me to journal on and obviously build data upon when I can hold and press winners upon that. So I left a good amount, like what? Yeah, 20 points into my target. But realistically, I don't know if I would have pressed it. But then again, it was part of my plan. So that was the trade for today. And it's just solely based off of using the simple auction market theory rules. And rule number 4 actually triggered here. Just to go over it really quick. Look at this. So we came into, like I said, price in initiative action likes to find old value. We came into this old value. You can see here, this old value area at these 3 5s, call it 3 7s, 3 0s. Immediate bounce out of that, and we gravitated right back into this value area here, into those 3 0s. And then what do you know? The 3 0s also acted as resistance from that prior VPOC, and that goes back to rule number 3: initiative action, pull back, and then sell off again. So price and the market is facilitated from balance to imbalance. It's the market cycles. And using these simple concepts, you can come up with nice high risk reward trading locations. And it may not work out every time. No strategy is ever 100%, but all you have to do is get something that works some of the day. Sometimes doesn't have to be 80%. You can have a 30% win rate and still be profitable as long as you manage your risk properly. And that's the name of the game. So going back to my risk parameters, it could have been a nice 1-for-1 day, yeah. Unfortunate, but this is the name of the game. $250 loser versus a $1,500 winner, and that eliminates X5 of this, even more than that. And that's the main lesson of the day. It goes back to being risk managers as traders at the end of the day. So now I'll call it from there. So if you like this video, smack a like, and feel free to drop some comment and criticism, and let me know if you guys want any more breakdowns. I haven't posted one in a while, so peace.